So now I'm turning on the YouTube live stream. Okay, thank you everyone. If you can hear my voice, please type in hello. Say hello. Let me know that you can hear my voice. Let me know where you're saying hello from. I know that DM said hello and was hoping for some music, but I was testing the meeting with all of our speakers. So I just wanted to make sure that was all working. It was way too complicated for me to get everything else in line. All right, so if you can hear my voice, let me know. Hi, Rao. Wonderful. I'm so glad that you can hear me. All right, so I'm going to give the late stragglers another minute or two to come on, and then I will introduce our speakers and everyone who's going to be joining us this evening. If you just give me 1 second, I am also kind of trading at the same time, so it's a little bit complicated, but that's all right. Okay, so, all right. Okay. Hello, everyone. I want to bring in our speakers in just a few minutes, but I want to thank all of you for joining me today. I'm very interested in today's class. I've invited Gordon Scott, who has been trading and he's been in the markets for more than 25 years. And he's got a lot of deep knowledge that I'm sure he's eager to share with you. I've also have Ash Bull, who is a fundamental trader like myself, but in a very different way. He looks at very different things than I do. So I'm excited to have him on board too. And we also have Paul, who's the head trader at Online Trading Profits and Actions to Wealth, who's going to be joining us in a minute. Hi, Peter from Queensland, Stephen, Akira from New York, Harriet from UK. Wow, Harriet, it is very, very late at night for you. Also, I can't even pronounce your name, Jirki from Finland. I believe it's very, very late at night for you as well. And of course, Gonzalo, hello there. Okay, so, I'm sure many people will be watching this on replay. So I think, we won't wait any longer. We'll go ahead and get started. So first, I'd like to invite our speakers to come online to say hello, turn on your cameras, turn on your microphone. And, I'll give, a quick intro of, all these gentlemen so you know who they are. Gordon Scott, he is a chartered market technician, a CMT, and his experience includes 25 years of trading as both a trader as well as a full-time investor in stocks, options, futures, forex. He's been a trading coach for more than 20 years, but experience goes above and beyond that. Many of you are familiar with Investopedia. He was a former head of education at Investopedia Economy and also the co-author of a book called Invest to Win with Tony Turner. So Gordon, you want to say hello?
Hi, Kathy. I'm so glad to be a part of this. Thanks a lot for inviting me along. I'm pretty excited to hear what you have to say and to share some of my thoughts as well.
Yeah, I've only met Gordon, I think it was last month, and we had such a spirited conversation. I'm so eager to learn more from him. And I also have Ash here with me. Ash has been trading for 15 years with a very high month-over-month, success rate using a combination of fundamentals and technicals. And you all know how much I personally love fundamentals, but Ash looks at it very different from me. He looks at what many of you love, which is the commitment of traders report, the COT data, seasonals along with fundamentals, and he kind of combines that with his own calculation method and pairs that with technicals in order to find the best trades of the day. So I'm very excited to hear from Ash as well. If you want to say hello, Ash.
Hi everyone, very pleased to be here. Thanks so much for inviting me, Kathy. I hear some people from the UK and Finland, so props to you guys as well for staying up late. It's about 1 in the morning where I am, so it must be sort of similar to where you are too. But welcome to all of you, and I hope to share something of use to you as we go.
And we also have Paul here, who has been trading for a very, very long time. He, started Actions to Wealth, which is, a big company in Asia that teaches and mentors people how to trade. He's also the co-founder of Online Trading Profits. And he actually, my favorite thing about Paul is that he basically manages a team of traders. And it's a fairly large team. I think it's like 15 or 20 traders. And he basically takes all of the best ideas from all of these traders and basically figures out ways to empower all of you to use this information and become a to get yourself on a journey of becoming a consistently profitable trader yourself. And he's got experience in forex and automated trading and technicals, coaching, the whole gamut, because he's worked with so many experienced traders. So I'm very excited to have Paul with us today as well. If you want to say hello, Paul.
Hi, Kathy. Hi, everybody. Thanks for that introduction, Kathy. It's indeed a pleasure to be here. Really looking forward to having a chance to listen to you guys and to share some information about trading. It's what trading's all about, really. The more as a community we can do a bit of this, the more we all get better, and that's what it's about for all of us, really, isn't it? Nice, consistent progress.
Fantastic. So I'm going to start. And for those of you that aren't too familiar with me, I've been trading forex for too long now, since 1999. And this is the market I started trading in when I had my first job at JP Morgan Chase. It's still the market that I'm trading in right now, and I'm basically doing what I've been doing all along, which is using a fusion of fundamentals and technicals to trade. And I'd like to start by sharing with you some insight into how I approach the market, because that's why all of you are here today, right? All of you are here to learn about how we look at the market from a fundamental basis, from a market basis, in order to identify our trades. So I believe that there are 3 ingredients to the perfect trade. And I think many of our expert traders here will agree with me, which is that the best trades are the ones that are supported by fundamentals, technicals, as well as market sentiment. When you have as many, hopefully all 3 of these, or as many of these items in support of your trade, that's when you can have the confidence to be able to select a really high quality trade. So how do you look at the market on a fundamental basis? A lot of people spend a lot of time talking about technicals, which we'll talk about as well. But on a fundamental basis, I take a top-down approach. And I basically, can categorize fundamentals into the 3 M's: macro, micro, and monetary policy. And I believe that everything from stocks to commodities to currencies are affected by these 3 things: macro, micro, and monetary policy. And that's the way, that's the way I want all of you guys to start thinking. I know that this seems like scary words, macro, micro, monetary policy. You're not as much of a fundamental geek as I am, so you may not love these words as much as I do, but it's actually quite simple. Macro basically means the front page news, the big stories that are affecting the markets, the things that you're reading about as soon as you go on, the whatever website, like CNN.com, Bloomberg.com, your local, national newspaper. These are the big stories, and they can be political crisis, an economic crisis. It could be an environmental crisis like earthquakes, tsunamis. It could be a geopolitical crisis like wars, or a trade crisis. Macro are the big fundamental stories that kind of overshadow everything else. I mean, the one that we remember the most is obviously COVID. And with these macro factors, these are the things that that shape the overall outlook for the markets, and it affects how how central banks think. It affects how investors think on an institutional and individual level. It makes people either feel like, okay, I'm really nervous about what's happening, I'm going to cut down my risk, or this is a temporary issue. I don't have to be so much worried about it. But macro are things that really make investors nervous, and they're the big stories in the world. Micro is day-to-day economic data. It's the things that, if you're a trader, it's the things that we talk about every day, like non-farm payrolls, today's US retail sales report, the inflation report. Macro determines the longer term outlook. Micro determines the day-to-day movement. Just like everyone was obsessed with the inflation and retail sales report this week. Those are the things that people can trade off of on a day-to-day basis, whereas macro kind of determines the overall trend. And then monetary policy is probably, if you're just going to focus on one thing when it comes to fundamentals, it should be monetary policy. It should be, where are interest rates headed? Who is raising interest rates or cutting interest rates first? Who is has no plans to change interest rates, and what do they plan on doing going forward? This is what, especially for Forex, single-handedly determines as the most important driver of currency movements, equity movements, commodity movements on a day-to-day, week-to-week, month-to-month basis. A really perfect example is today's or last night's, depending on where you're from, retail sales report. The data was horrible, right? But we didn't really see a huge movement in the markets because investors are thinking, the Fed's not thinking about lowering interest rates until June. So the piece of data in February, the first major piece of weakness, isn't really going to move the needle for them. So if you want to learn how to become a fundamental trader, the one thing you should be thinking about is, where are interest rates headed? And the answer to where interest rates is headed is based upon, micro, which is what economic data is doing, and whether we have any big macro stories that are affecting the markets. Like last year, we had, a U.S. banking crisis. Everyone thought that these banks were going to go kaput. Thankfully, it was a very short blip on the radar, but still, these are the things that can affect how central banks think and where interest rates are headed. And when it comes to fundamental analysis, I think that's very important not to fall into the trap of single market analysis. What is single market analysis? Single market analysis is basically like you're living in a bubble where you're just focusing. If you're trading gold, you're doing nothing but focusing on trading gold. If you're trading euro dollar, you're doing nothing but focusing on trading euro dollar. And that is one of the biggest mistakes that I think people make, because there's so much clues that you can get from the rest of the other markets. You can really kind of get an edge, a leg up in figuring out where gold is headed, where the dollar is headed, where the euro is headed, if you just kind of broaden your horizons and look beyond the one instrument that you're trading. And this should make sense to you because for example, if the US economy sneezes, the rest of the world catches a cold. This is a very well-known idea. So that if there's trouble in the US economy, you can expect that it's going to affect the rest of the world. And it is for this reason why US economic data is so important. It's not because Americans think they're the most important in the world, which I will admit they probably do, but it's more because the US economy is so impactful on the rest of the world. And if the US economy falls into recession, it'll be hard for the rest of the world to do so. And that's why you can look at clues. If you're trading the Australian dollar, if you're trading the Canadian dollar, you can look at clues as what's happening in the US, for example, or in other parts of the world to get a leg up on what's happening in those economies. And the same is true for China. So for Canada, for example, how the US economy performs has a direct impact on how the Canadian economy performs. How the Chinese economy performs has a direct impact on how the Australian and New Zealand and Japanese economies perform. So you can't just be in this tunnel vision where you're just focusing on, if I'm trading Australian dollar, I'm watching nothing but the Australian data and the chart and nothing else. You really have to broaden your horizons and keep your eyes wide open to what is happening in other countries and other markets. Now, the other country part may be a little hard. The other market part, I think, is a little easier because with the other market part, It is what I like to call inner market analysis. And this is what I was trained in at JP Morgan. I was trained in inner market analysis, looking at how equities are moving, looking at how bonds are moving, looking at how commodities are moving, to try to figure out how currencies are moving. And so what I do when I start my day is I always, number one, check the economic calendar, check the micro to see whether there's economic data coming out that could affect my trade, or if there's economic data coming out that that has already come out that could give me a sense of how to trade in the session ahead. So, for example, if this is non-farm payrolls day, then I know that I will not be trading any US dollar pair until after the NFP report. If it was a day where we just had Canadian labor market numbers and no US labor market numbers, then that is also telling me that, okay, Kathy, maybe you want to avoid trading the Canadian dollar before the Canadian employment report is out, and focus on something else like the euro dollar or Aussie dollar, unless of course I had a strong opinion on the Canadian dollar. But what I will also do is, you don't see this here, but let's imagine that the night before we had strong Australian labor market numbers. Then when I wake up in the New York session, I may be looking to buy Aussie because I'm going to be looking for American or US traders to react to that strong Australian report. So the first thing I do every day is I look at the economic calendar to see what kind of data has happened. Then I look at, and this is where the inner market analysis comes in, I look at what are stocks doing? And what stocks are doing basically is the number three ingredient of a perfect trade. The first ingredient was fundamentals, the second ingredient was technicals, the third ingredient was market sentiment. And having market sentiment on your side is so important because you want to be basically going with the tide, not fighting against it, right? So the second thing I do when I start my day is I look at what are stocks doing. And so, take a look at this. This is a chart illustrating how important stocks are to currencies. The orange is the S&P. The candlestick is Aussie dollar. And you can just see yourself, they are mirror images of each other, illustrating how important stocks are to Aussie yen. So what this tells me is that if stocks are, down 500 points, there's no way I'm buying Aussie yen. I'm going to be looking to sell risk, to go with that move. If stocks are up, like for example, right now, stock futures are down 60 points. I'm going to be looking for short trades in some of the risk pairs rather than long trades because sentiment is on the side of selling rather than buying. This shows you how this is also important for the euro dollar. There's a very strong correlation. The orange line is S&P, the candlestick is the euro dollar. Very strong correlation between the euro dollar and the S&P. So if I'm waking up in the morning and I see stock futures down 100 points, I'm going to be looking to sell the euro dollar, not buy the euro dollar. The third thing I'm going to do is I'm going to look at bond yields because the stocks tell me what the market sentiment is. Bond yields tell me whether I should be long dollars or short dollars. And so one of you on YouTube is asking me, is a dollar a buy? And one of the things I will tell you is why don't you look at bond yields? Bond yields right now are up. And so bond yields are up, bond yield futures are up, and therefore it is no surprise that dollar yen is up because look at this chart here. The orange line is the 10-year treasury yield. The candlestick is dollar yen. Once again, mirror images of each other. So I will not, or I will avoid fading what the bond yields are telling me. So for example, right now, bond yield futures are up. I will be looking to buy dollars and not sell dollars. And so broadening your horizon beyond the tunnel vision of the instrument that you trade can really give you a leg up on a fundamental basis on picking and selecting the right trades and avoiding the bad ones, because this can also help you avoid bad trades. Because if your technical setup is telling you to sell dollars and bond yields are up, maybe you should not do that. Maybe you should wait Maybe you should take a small position only. Maybe you just pass on the trade. That's how you can look at these other markets and use it to help select better trades. And this also shows you a relationship with the euro dollar, which is a little harder to see because they're inverse. When bond yields, which is the orange line, goes up, and the euro dollar, that means that it is positive dollars, bearish, negative euros. So euros going down, if you see my right hand my chart, when the orange line, bond yields are going up. So by that same token, no surprise, US Treasury yields are up right now. Guess what Euro's doing? Euro is down. I will not be buying euros if bond yields are up, because that is a signal to sell euros, not buy euros. So I only look for trades in the direction of yields and in the direction of stocks. And that's one of the ways I think is more tangible for all of you to combine, to bring fundamentals into your trading. Because while I would love for all of you to be, experts at analyzing country outlooks and what the central banks are doing, it's much more tangible for you to be able to, and easier for you to be able to just look at what bond yields are doing and what stock futures are doing as direction of your trades. And the whole idea is because you want sentiment on your side. Because when you have sentiment, market sentiment on your side, you're basically swimming with the tide and not fighting against it. Maybe sometimes you're fighting against it. You might have some good trades, but I assure you, you're going to have a lot more headaches, a lot more, you'll be exhausted a lot more, and a lot more frustration when trying to fight against market sentiment. And only after that do I check the charts for my technical setup. And everyone has a different technical setup. My technical setup is my indicator ZIP. And it's just basically a very clean way that I've built my strategy where, when the background's green, I want to buy. When I get a white candle, it's a buy signal. When the background is red, I'll be looking to sell. I was just telling the guys earlier that I had a screaming buy in Euro Kiwi that I triple zip I had three white candles in the green background. I was a screaming buy, and I was waiting to buy it, and it had just popped. But this is where you bring in the technicals. I check my charts for my setup, but I also will not just use my own setup. I also like, combining other things. Like I like combining moving averages for moving average clearance. I like to look at multiple time frames. On a technical basis, there's a few different ways that I look at the market, particularly, that I would love the opportunity to share with you guys, and we'll talk about how later. But the first thing that I do is I understand and absorb all the fundamentals, and then I take that in the context of the signals that I get on my trading strategy. And only when all of them sync up do I take my trade. But the last piece of the puzzle for me as a fundamental trader is that I only trade also at specific times of the day. I personally only trade at the early New York Open and at the Asia Open. My setups works in the London Open, but personally, I'm obviously not awake at 2 a.m. So I don't trade it at 2 a.m. And I actually haven't traded it often enough at 2 a.m. to really say that it's the best time. But New York and Asia Open are my golden periods. And there's a lot of reason for that, because I trade momentum. I trade trends. And momentum is generally the strongest, in my opinion, at market opens. And so I understand my own trading strategy inside and out. And so I understand when it works, when it doesn't work. And understanding that is really key to becoming a good trader, because you want to understand what drives the trade, but you also want to understand when your trades work and when it doesn't. And there's so much that I would love to share with all of you guys, and I'm sure I'll get the opportunity to later. But what I want you to leave with you with my idea is that you want always, when you trade, to have fundamentals, technicals, and sentiment on your side for every trade. That's when you get the most powerful setups. And hopefully you've learned a little bit about how you can look at the other markets to help you select better trades through some of the things that I've shared with you today. So hopefully you learned something. Thank you, Leroy. I'm glad that you enjoyed this. And now, and feel free to fire away with questions. We'll answer questions later. I want to give Gordon the opportunity to share his perspective on the markets.
Thank you, Kathy. Hopefully you can hear me clearly enough, and mic's working. Hopefully you can also see my screen now. I tried to just share it. Let me make sure that's actually the one I wanted. Yeah, I believe it is. Should see a screen that says the inflation question.
Yes,
I got to tell you, folks. Can you see it? Okay, great. I got to tell you, folks. I did not see Kathy's presentation beforehand, but if I had, the charts that I've prepared would be exactly the same one. So I hope that you'll find this to be a nice dovetail from what she just said. In fact, she saved me a few minutes from having to explain some things. Of the items that she listed as micro, there is one that has become so important over the past 14, 15 months that it's pushing into the macro area, and that is inflation and inflation expectations. Inflation is so important now, in US inflation specifically, because in 2022, when the US Fed started raising interest rates, it just moved the heavy center of all currency markets towards the US dollar. And that impact has not gone away. It's not as, currency markets haven't had as good a trending year as they did in 2022, but there's still a lot of activity and a lot of movement, a lot of comparative increased volatility compared to years previous to the pandemic in the currency area. And so, and just in fact, just this week, we saw that this has not gone away. We would have thought that inflation expectations were going to decrease as the rate of inflation would slow and maybe even turn around, and that the US Fed might even consider reducing rates, right? That was all in the minds of macro investors and macro analysts here up until Tuesday. And I'll show you just a second if you're unaware, but basically we got the Tuesday report, which said inflation is running hotter than expected. Not super hot, not like it was in 2022, but hotter, and that's a problem because it's not supposed to be getting worse. It's supposed to be slowing down right now because the Fed's kept rates high, et cetera. Now, so let me ask you these questions. If the US experiences inflation, then the US dollar should become less valuable, right? I mean, inflation and then lower value stands to reason. So if in fact there are going to be more dollars out in circulation, then it becomes less valuable to hold US dollars. So why, if we have hearing about inflation, why is the US dollar going up, right? So that first one, doesn't seem to kind of hold. The second one, expectations of US inflation drives US interest rates. Is that true or false? Think about that for a second. And the third one, there isn't any way to gain an advantage from listening to the inflation reports because they're all so weird and squirrely. See how you would answer these. I'm just going to tell you the way I answer them is only the middle one is true as written, right? Now, these other ones relate to things that should be true, but in today's market, they're not acting that way. If the US experiences inflation, the dollar is becoming more valuable. That's since 2022, because if the US dollar starts to run away, if the US economy starts getting runaway inflation, then the Fed will increase interest rates in order to counteract that. And if the interest rates go up, then bond yields go higher, as Kathy demonstrated, and that means the dollar becomes more attractive. So it's funny, but that's kind of opposite of what you'd think. The other one, there isn't a way to gain any advantage from inflation reports. I'm about to show you why that one is false. Hang on here. There is a relationship between the US dollar and specifically small cap stocks in the US. I was so grateful that Kathy showed the Aussie yen and U.S. stock correlation, specifically the NASDAQ 100, so tightly correlated with the Aussie yen over many years. And I was telling people about that in Bali last, not this past November, but the previous one when we had that event. I got to tell you, folks, if you haven't heard about the Bali event, you need to. And if you are planning on coming, I cannot wait to meet you in person, shake your hand. If you're not able to get there, if you didn't get in and get one of those tickets, you really ought to consider the online, because last time I was there, it was my first time, I was amazed at the quality of, I mean, it was like being in a high quality prop trading room, prop trading environment. I just couldn't believe how many good quality trades were being called out right as part of the event, but also getting to hear from the people that were calling out those trades what their background is. I mean, just one idea would make the whole thing worthwhile. But you're going to get a dozen of those each day. Anyway, I just can't go on enough about how fun that event is, and I'm looking forward to it again this year. Now, the relationship between small cap stocks and the dollar inflation expectations, or the inflation expectations, are making this relationship a very key indicator, and something you really want to watch if you haven't ever started watching into it before. Now, I've written out these bullets, and if you want to really study and learn this, do a screen cap and take this. But I'm not going to read through each of these, because hopefully you understand the idea. Small companies got to borrow. Interest rates go higher. Borrowing costs get higher. Harder for that company to make profits. Therefore, investors are less bullish on that company. Interest rates start going lower. They can borrow easier. Investors more bullish on a small company. So that's the dynamic that happens. And what that means is that you get an inverse correlation. These sort of things are, not, as Kathy was saying, mirror images where they're looking the same. They're looking the opposite. See these big gaps. One of these lines goes up, the other goes down. One of them starts going up, the other one comes down. They do the opposite thing, where you get these big gaps, these big spaces in a chart. Well, okay, the line is the dollar, the US dollar, and the candle chart is the Russell 2000 ETF, ticker symbol IWM. So if you compare IWM and the stock UUP, which is an ETF that tracks the dollar, it tracks double the dollar, but I mean, I'm just looking at shape here anyway, shape and price trend direction. Notice the correlation study down at the bottom. It spends most of the time on the lower half, meaning it is inversely correlated. Yeah, you get these periods where it pokes up, but notice that pre-COVID, they were bigger. Ever since then, they're tiny. Most of the time, these things stay down below. Now, this is the daily chart, and that correlation study is a 3-month look back. And so what you have here is this persistent pattern. It was there before COVID. It was there during. It's here now. And through the whole time, the basic principle is, if small cap stocks are going up, the dollar is likely to be going down, and vice versa. Now, it's usually the case that the dollar is the driver on this, but it doesn't always happen that way. Sometimes small cap stocks will kind of start a bit of a move, and then it'll play out in the dollar. The big thing here is that you want to keep an eye on this chart. Now, this is a large chart. This is going back to 2017 till now, 7 years. But here's the more recent chart, just over the past 5-6 months. And you can see that UUP has had this sort of downward move during a period of time where IWM made a nice strong move up. Look right here where I've got the red arrow pointing. This is a place where UUP, the US dollar, established a lower low, and after having established a lower high. So right here, confirmed downtrend. Now, you could make some quibbles about why it could have been earlier. Fine. If you're that good of a chart reader, great, you could have done better. But at a minimum, you could see this, bright neon sign blaring out at you. Hey, we got a downtrend in the US dollar. If I got a downtrend in the US dollar, what does that mean for small cap stocks? These are the growth stocks. This is the stuff that goes from $35 to $100 in a short period of time if something is going right for that company, right? This is a whole index of them, 2,000 stocks. And so if in fact this index, the dollar's going to go down, this index is going to go up. And you see that action right here. If you were to get this signal and you waited a couple of days and joined in, look at that move. That's a nice 15% move in about a month's period of time. And since then, look at how it's reversed. We've got the dollar climbing, and this has stopped going up. It hasn't gotten into a serious downward trend. It's sort of flattened. So something's got to give, right? Either the dollar keeps going up and therefore these go down, or this chart is actually going to tell us that in fact the dollar might turn around and start going lower. Let me quickly give you that argument. See, here's Bitcoin making this huge run. Is Bitcoin the new inflation marker? Here's gold, the gold line. It's not quite doing the same thing. We've got the S&P 500, big old drop. This came on the day when the news came out that inflation was running higher. The CPI report was 0.4. They thought it was going to be 0.3, 0.4. That's bad, right? So that's how the market reacted. But since then, just last 48 hours, look at that. Boom, boom, up we go. And in fact, if I put this IWM in here, the chart I had only went to this day, but this is what happened just today. IWM went up and made a new short-term high. Wait a second, if inflation expectations are that we're going to get inflation, we're not going to get lowered interest rates, what is going on with investors buying risk-on assets, small cap stocks, right? Well, I think this bears watching, because either this thing has hit its high and it's going to turn around, or if it breaks its high, that might be a signal that that dollar and yield relationship is going to break, and we would see US dollar pairs turn around and go the other way. So that's an important heads up, just because in fact you've got these investors which are really keen to try and watch for when small cap stocks, lower price small cap stocks, become an opportunity to be bought, and they throw money into there. If they don't do that, then they're looking for places for safety. They're putting their money in cash. That means the dollar is going to be in higher demand. That means the US dollar and all the US dollar related pairs should continue to move. So by watching the relationship between the dollar and IWM, the Russell 2000, you can get an idea of where a macro trend is about to develop. And just like Kathy was talking about, if you trade smaller stuff within the larger direction of that macro trend, you really can improve your edge in trading. Learning how to improve your edge in trading is something I key on a lot, and something I'm going to be talking about. Bali, I'm going to show some revolutionary new tools for getting that as part of your trading process, an improved edge, and how you can use your own personality to get an edge. So these are the turn in the relationship that represent a new opportunity. If IWM changes direction, US dollar is more likely to make a move, and vice versa. So you really want to use your trading system with a known edge, and then make trades on one of these two, either ETFs or on the US dollar pairs in the Forex currencies. I hope that was useful for you. I think, am I turning it back to Kathy, or are we going on to Ash?
Yes, thank you so much. That was very useful. I definitely learned something new, especially since I don't follow small cap stocks at all. So thank you, Gordon. All right, let me give Ash the screen and let him share his views on how he looks at the market.
Fantastic. Thank you very much, Kathy. I just wanted to kind of give you a brief background of who I am and how I arrived at this industry. I actually started when I was at school. All I thought about was music, and all I thought about was making it in the music industry and going on tour with my band and having a great time kind of touring the world, I guess. And in early 2000s, I kind of got my first break. And this is me getting an award handed by Sir Bob Geldof. And during that time, I kind of, that was kind of the launch pad for me. And I then started to release numerous albums. I wrote a few film soundtracks. I did manage to tour the UK, parts of Europe and America. And I guess in some respects, it kind of fulfilled my dream at the time. What's interesting, though, is that maybe my dream wasn't exact enough, and many of you will understand about certain ways to think. We have to kind of train our minds to think and approach life in a certain way if we're going to be successful. I think I probably did satisfy my dream at the time, and it wasn't big enough, and in some respects it ended up kind of harming my progress. And the music industry doesn't pay that well if you don't really break through. You can get to a certain level, do okay, but if you're really going to be comfortable, you've got to kind of break through to the upper echelons and the top level. And that's what kind of led me to trading. I think in the mid to late 2000s, I was exposed to some trading, and I went on some courses and learned as much as I could about trading the markets, mainly the technical aspect of it, the charts, and ultimately that's when I caught the bug. So fast forward to today. Now I live in a place called Brighton with my 7-year-old daughter. This is her on the beach, and I trade full time, and I'm an investor full time. So my approach, just to kind of really, I guess, cement some of the things that Kathy and Gordon have talked about. My approach is quite similar in some respects. When I kind of was exposed to trading and I learned about technical analysis and about charts, and I worked for an American company for a while, educating. And what I realized sort of over time was that the technical picture that I was looking for was only 50 to 55% accurate. It would only kind of like give me 50 to 55% success. And that's something that I learned from Gordon, actually, when I met him in Bali last year. He completely changed the way I thought about the markets, and I thought about my approach. And rather than focusing purely or mainly on the technicals, I completely kind of switched my view on the market. And what I do now is very similar to what Kathy and Gordon have been talking about, and that is I focus first and foremost on the fundamentals. That's what drives my decision. What is going on with each economy, each global economy? What's going on around the world? If I can get a decent assumption of what's going on in the economy, then I can get a decent assumption of what monetary policy that Kathy touched on will be. And she's absolutely right. Interest rates really drive what goes on in a currency. How valuable will that currency become over the next period? And understanding the period you are trading in is very important, because if you are looking for long moves that are going to last 3 to 18 months, the macro plays a much bigger role. If you're looking for moves that may last days to weeks, the fundamental and the micro are going to play a much bigger role. And my trading style is much more to do with kind of days and weeks. So the micro plays a very, very big part of what I do. And reading the fundamentals of each economy. What's CPI data saying? What's unemployment data saying? What's the GDP of each country? What were the central banks saying before this data was released? Are they intimating that they are getting ready to raise, pause, or reduce interest rates? And then the data becomes significant. I'm then focused and zoned in on the data to see what it's suggesting. The next thing I will go to is the seasonality. So I'm interested in what tends to happen at this time of year, over, and looking at the average kind of move over a long period of time. Really the 20-year is as short as I'd want to analyze. What's happened over the last 20 years to this currency pair during this particular time. And these are the things that I'm trying to get on my side. Are the fundamental data points pointing up or down? Are they pointing lower or higher? Is the seasonal move in this currency pair usually raising during this time of year or going down at this time of year? Because what I will then look at is the connection between those fundamental drivers. You know, as an example, do we see growth in a country like Canada between February and March fundamentally over a long period of time? You know, as that's shown in March, that the Canadian economy tends to grow. If that's the case, and the seasonals also suggest that it tends to go up, then I can start to make the connection between the fundamentals and the seasonals. The next thing I want to do is look at the COT report. And Kathy mentioned this at the start, that some of you are really interested in the COT report. The COT report plays a part in my approach, because I want to know what the biggest institutes are, how they're interacting with the futures market. Are they suggesting that they are switching positions? Now, specifically, I focus on the speculators, because the speculators satisfy my time frame expectations more than the producers. So I focus on the speculators. What are they doing? Are they buying and selling? Is it in line with the fundamental and seasonal picture that I have read? If it is, then I will decipher that I have a trade in the current, you know, with a currency market. And the final thing that I will then do, as everybody would do, is focus then back to the original strategy that I learned back, 10 years ago or whatever it was, the strategy that I really kind of got into. Then I will focus on the price action, and I will decipher whether the strategy is lining up, and that all of a sudden supercharged my technical analysis, and it supercharged really what I was doing. So just to give you a kind of a hint of, you know, maybe where you can sort of start to look at some stuff, and the kind of thing that I'm looking at. The website that I've settled on as my favorite is investing.com. And if you open up a calendar here, Kathy was talking about opening up your calendar for the day. You open up your calendar, and it shows you all the deliveries of the fundamental data. I tend to focus on 2 stars and above. I don't really sort of worry too much about the 1 stars. I focus on 2 stars and above, and get a reading of each economy from that. And you'll notice here, you know, one of the reasons that the pound has seen some weakness over the last couple of sessions is that the CPI data came in less than expected, but more significantly, we had GDP data yesterday, which was pushing the UK into recession, and that's going to put some pressure on the central bank to lower interest rates. The COT data, I will effectively drag that information off the CFTC website, and I'll make my charts. And if we have a look here, we're looking at the euro here, and we can see that, you know, the speculators have been in line. They're not always correct, which is why the other 2 aspects are very, very important. You know, that things have to line up. Their timing isn't always right on the money, but more often than not, they are right. So when I'm kind of when I lead into the COT data, this is the kind of thing that I want to see. I want to make sure that the speculators are selling. This is showing net selling of a particular, you know, of any currency that I'm looking at. And then, of course, this would be an example of a seasonal chart. This is the Australian dollar, and I can see that through July, right the way through to around about October, the Aussie tends to be weak. So if things line up during this particular period, then I have got a greater likelihood and greater confidence that my trade is going to work out. So that just touches really on some of the things that I look at. I echo Gordon's sentiment. I hope to see some of you in Bali, and if not, that you know, I encourage you to kind of get online. The learning is going to be amazing. I'm really looking forward to meeting Kathy and seeing Gordon again and spending some time with Paul. But thanks very much for giving me your attention, everyone. I really appreciate it.
Thank you so much, Ash. All right, so let me now let Paul share some of what he wants to talk about in terms of the way he looks at the markets.
Hey everyone, thank you very much for that, Kathy. Great stuff, great sharing, Ash and Gordon as well. Thank you. Can you guys see my screen?
Yes.
Got it.
That is good. Can you see my chart?
Yes.
Yes.
Brilliant. Look, I look at the market from a slightly different perspective, and I think that's one of the really cool things about trading is that we're all able to have a look at the market from slightly different perspectives. And one of the things that I do, I'm looking to trade low frequency, and I'm looking to trade high reward to risk. So I'm not looking to make 1-to-1 or 2-to-1. I'm looking to make good returns on my trades, and I'm not looking to trade every day. In fact, I'm probably looking to trade at most 2 to 3 times a month. And my process is I start with a very simple technical setup, which I'm about to show you guys. And I'll run you through that on a few different charts in a few minutes. But once I've got my technical setup, if it's clean and I like the technical setup, that's when I'll go and have a look at the fundamental stuff. And I'm really lucky as the founder of Actions Wealth and Online Trading Profits. What I'm able to do is I'm able to look into Ash's stuff as well. I'm able to follow Kathy and watch her videos as well. But I'll have a fundamental bias, but I'll look for the technicals first, and then I'll check fundamentals line up for it. And if I do, that will particularly impact my risk on a trade. So my trade setup is very simple. There's a nice example of it here. These two lines are the 200 simple moving average and the 200 exponential moving average. And all I'm doing is trading bounces off the 200 moving averages. So I like this kind of price action where none of the candle bodies get above the line. So you get a bit of wick above, no problem, but a nice clean bounce, and I will then look to trade this back down to here. Now, I'll show you a few more examples of this as we go along. I don't trade 200 moving average breaks, so I don't trade any of that, and I don't trade any of that where it breaks through those lines. I'm only looking for bounces. I'm looking for bounces that line up with major trends. I'm looking for bounces that line up with fundamentals and seasonals. Now, when I take a trade like this, I will trade it on the daily, and if I get a chance, I'll add positions on the hourly, but I live in New Zealand and times aren't great for that sometimes for me. What I'm looking to do once I get in is once I get below monthly pivot, this is monthly pivot here, when I come back to monthly pivot, I'll close part of my position, not all of my position. But that's really where I guarantee myself a profitable trade. Now, I get a bounce here, and it comes back to monthly pivot there. And so my entry would be here, my exit would be there. I'll be scaling out. So it's going to be a losing trade. And I said at the start, I'm going to trade looking for high reward to risk. So I'm going to trade low probability. I'm not expecting to win a lot. I'm expecting to win a lot when I win. Hope that's really clear. Here's another bounce for me here. No candle above. This is the exponential moving average this time. I'm looking to get in through here and get down here, and I'll stay on this trade now until it comes back and interacts with monthly pivot. Now, that was Aussie CAD. I'm going to take you through a few different ones here. If you have a look at Aussie Swiss, most of the products, that's really the trade I'm looking for there. Nice price action, big move, comes back to monthly pivot for me to scale out here, and then I can come in and I can manage this depending on price action. In reality, I probably would be out here. Price action here giving me a double bottom type look, and I'll just exit the rest of my position at that point. I may leave a small amount to go the distance on that. Aussie yen, we can see on Aussie yen, I've got an entry here, I've got an entry here, I've got an entry here, and for all of them, all I'm looking to do is get to the top of the bounce bar, get up, in this case, above the monthly pivot, so when it comes back down here, I'll scale out, and then I'll sit in for the ride and see how far I can go. I am looking for, ideally, I'm looking for 5, 6, 10 to 1. So I'm looking to win even 20% of the time, 25% of the time, no problem for me. I'm looking to win more than that by being really selective about making sure that my price action around the entries is really good and clear, really nice, that I've got a seasonal bias where possible to go with. Now, I do this on currencies. I do this on gold. You can see here, there's a 200 simple moving average bounce. I really like these where I've got monthly pivot and the 200-day moving average to bounce off. Price action sits above, and up I go. Take a little scale out there, sit in the trade for a while and look for some price action telling me probably here I'll close that trade. I'm about to go through this stuff in more detail with you in Bali. Here's oil. You'll see again here, this lovely thing here. I've got the 200 moving average and I've got the monthly pivot. I've got lovely price action sitting above it the whole time. No candles breaking it, just all sitting up above, into the move, up to here, scale out there. And then again, I'll be looking for, I'll sit through this, no problem, but I'll be looking for some kind of sign that this trade is technically running out of steam. And indices as well. There we go. 200 simple moving average bounce here. Now, there's a little more to this for me around filtering. Certainly fundamentals are interesting to me. Seasonals are interesting to me. But also there's some filtering around what we do with monthly pivot. And if you do join us in the event we're doing in Bali, I'll take you through this stuff in a little more detail. And again, I think one of the great things about trading is that what we're looking to do, each of us, is find our method. There's a beauty there, isn't it? Look at that. Bouncing off both the 200 moving averages, popping away up here, a little scale out up here. Well happy at this point, Certainly not hanging in, past here if it comes back at me here when I'm starting to get, lower highs coming in, lower lows coming in, and well out. So that is a view of how I trade. Back to you, Kathy.
Thank you so much, Paul. So, what we wanted to share with you today, both Paul, Ash, as well as Gordon touched a little bit on Bali. And, Bali is a big event that we're doing, that Paul's doing, and invited all of us to speak at in March. Now, many of you cannot make it, so he has put together an amazing online access to the Bali event that we're having. And just to give you some information on this, the Bali is really a meeting of the minds. We have more than 10 master traders that, are attending the Bali trading retreat. And this is normally between March, I think, 18th to the 21st. But with the online version, what's really special about this is that you will get even more training than that, in the sense that, starting on February 29th, some of the other speakers that are going to be trading live in Bali will be sharing with you their trading strategies. You've heard from Gordon, you've heard from Ash, you've heard from myself. Hopefully you've heard things that you found as valuable, but Adam, Dr. George, along with a number of other traders, will also be teaching you the ways that they look at the market. So as a part of our 2024 trading masterclass that Paul has put together, what you will get is to learn new strategies for more than 10 master traders, along with 4 days of live New York, Asia, and London trading. We kick off with an intensive session with Ash on February 29th at 8 p.m. and all of this will be recorded. He's going to share with you exactly in a much more detailed way how he used COT, seasonality, and fundamentals to pick his Forex trades. And then a week later, Dr. George Niabadza is going to share with you, for those of you that love day trading, his 5-minute Forex price action strategies. He has used these strategies to identify high probability patterns across the different market opens, and I think many of you will find this very, very valuable. Then Adam, who has traded for large funds in London, and also provided market analysis for the Intercontinental Exchange and the Futures Institute division, will teach you how to swing trade on the daily and 4-hour time frames. And then, for 4 days, myself, along with all of these wonderful, experienced traders you see down here, are going to trade live for 4 days, the New York, Asian, and London Open. And you will see how these trading techniques are put into action. But not only will you see how the trades are made in real-life environments, but you will also learn the reasons behind and the strategy behind all those trades, not just from the four of us here, and the 4 of us in the first couple of weeks of before the event, but from a large team of master traders with experience from all over the world. And this is the team that Paul has put together, and he's really been, a leader in driving the empowerment of traders and getting you all to learn as much as possible from as many as traders possible in a short period of time. So for a very limited amount of time, this masterclass will be available for only 48 hours, next 48 hours at $9.97 compared to a normal price of $19.97. So we definitely encourage you to register for this event. And, Paul, do you have anything to add?
Look, I've got a couple of slides. If I can run through it, Kathy, that would be great if I can share again. Look, I thought one of the things that Gordon said was really great. He said it's like being on in a trading room, and that's really what Bali's all about. It's about being in a live trading environment with a bunch of other traders, and that that's something that I don't think many traders get to do. And it's fantastic. Sometimes you go along and you listen to someone and they're great, and you watch them trade for a few weeks, and that's fantastic. But this is really different. This is about having a chance to be in a room with 20 professional traders who are looking at what you're looking at, talking about their strategies, talking about their approaches, not only answering your questions, but discussing your questions, where you can get the view of a scalper, you can get the view of a position trader, you can get the view of a fundamentalist, you can get the view of a guy who's trading seasonals, you can get a view on all of this stuff on your question at one time, and it can provide really different insights into what you're doing and how you're doing it and how to evolve super quickly. Look, as you said, Kathy, the live trading, it's sold out. We can only fit, and look, this isn't a bring along 20 traders, bring along 5,000 people. This is bring along 20 traders live. We're going to bring along 30 clients. That is literally 1.5 clients for every trader that's there to make sure the people who are there live get quality time. Not only that, what we're going to do is we're going to allow a very small group of people to come online. Now, it's only because of the relationship with Kathy that we've allowed that discount. This thing will fill up every time because we'll allow about another 10 to 12 people to come online and join us to make sure that the people who come along get a genuinely high quality, unique experience. You're not going to be in a room with 100 or 1,000 or 10,000 people. You're going to be in a room with 10 or 15 different people online while we trade live, able to interact with us, get direct help. If you're looking for a way to improve your trading quickly, this is the best way that I have seen. Now, we're going to trade through the days. We're going to trade from Monday to Thursday, the 18th to the 21st of March. We're going to trade from in Singapore, Bali time, 8 o'clock in the morning to 10:30 at night. But what you can do is you can pick your involvement, like Kathy was talking about. You can go and watch a group of great traders trade the Asian Open, or you can watch a set of great traders trade the UK Open, or the US Pre-Open that Kathy trades, or the US Open that Gordon will lead. Myself and Ash will lead the UK Open for this event. You can come along and watch us trade with a team of traders in those markets in different ways. One of the things that I'm personally really excited about, as I say, I trade low frequency, and I'm keen to start day trading Asia. Now, I don't know about you guys, I've never been able to find enough movement to make money in Asia. What I'm going to do for 4 days is go and sit there with Kathy and Dr. George and Adam and watch them make money out of the Asian Open so I can work out how they do that so I can copy it. And for me personally, that's the best way I learn. It's different for other people, but for me, the best way to learn is to be doing it with somebody. Hearing about it's cool and it helps, but being with them as they're explaining what they're doing and I'm looking at my own charts, that accelerated my learning, and it's why we created this to accelerate your learning. So you can pick your parts. It's mainly Forex. We've got Gordon Scott there, so we'll be doing some stocks. We've got Simon Williams there, so we'll be doing some crypto, but only a little bit. It'll be mainly Forex. We're talking a lot about fundamentals and lining those up with technicals and sentiment, as Kathy was talking about. They're long days, but you don't have to be there all day. You pick the time you want to be there to get the value. For those that join us, we'll send you a timetable so you'll know who's on when, so you can join for the parts where you're going to get the most value. So look, there'll be at this stage there'll be 22 professional traders in the room during the day. Now again, it's a long day, so they won't all be there at the same time, but they'll all be there for, most 90% will be there for the UK Open. There'll be people there for the Asian Open. There'll be at least 10 or so in there. The American pre-market. Now again, for me, I can't trade the American Open because it opens at sort of 1 o'clock in the morning New Zealand, but 2 o'clock in the morning New Zealand. but 11:30 at night, I'm often trading. And that's Kathy's market. So I'll be watching that as well. And this is what it does do. Whatever your schedule is, whenever you're free, whenever it suits you, you can watch professional traders making money so you can duplicate what they do. Look, I said at the start of this that, and I appreciate the chance to show the slides, that, look, the live event's sold out, and it's always sold out. We've never gone to Bali. We only go every couple of years. The online event will also sell out, and the next chance to do this will be 2 to 3 years away. You can imagine that when you run an event where you're trying to coordinate the calendars of professional traders, getting a week in Kathy's calendar is not easy. Getting a week in Gordon Scott, Ash, George, Adam, and on and on and on. And finding a time we can all get together to do this, we love it. But finding a time we can all get to do this is rare. So the next one could be 2 or 3 years away. I'm going to let Kathy bring 3 more people to this event. Online, 3 more people can come along, and that will be it. So you guys get the chance. You're going to get a great price at it. I would encourage you to get involved. And what I will do, you guys, today you've had a chance to meet Ash, you've had a chance to meet Gordon, and they're both doing full-day courses on the build-up to Bali. And I haven't told Kathy this yet, but what we will do is give you guys access to those full-day courses. So you can either come in live, it's quite late US, depending on where you're in the world, but either live, or you can watch the video and you can see a full program from Gordon and a full program from Ash, so that when you come into the trading retreat, you know what Kathy's doing, you know what Ash is doing, you know what Gordon's doing. The rest will be explained as you go. You won't get another opportunity to be in a live trading room. You won't get another chance to be in a trading environment with a team of traders helping you. And if people ask me all the time, and people always ask me, if you like, what's the magic of Bali? Because people love it. You know, literally every single trader in my team goes every single time. And what it is it puts 20 people on your trading team. They're not there for them. They're there to help you. And that's quite unique. Kathy, back to you.
Yeah, I cannot wait to be out there. And thank you, Gordon, for opening this up to my community. And I'm excited to be there and learning from and all of these traders and meeting them. And it seems like a really unique event. So I really, hope that you will all consider, joining us. And, we look forward to seeing you there. Now, if you have any questions, we'll hang on for a couple more minutes. I have dropped the link into the questions box as well as the YouTube chat, and I'll also put it in the chat box if you want to register for the events now. I think Gordon says there's very limited amount of spots. He's already sold out the in-person and a large portion of the online. So take advantage of this before it's gone. I'm excited and I can't wait to be talking to all of you then. All right, any questions? Let me see. When was this Bali event first held?
That's a really good question. We've run 4 of them over the last 10 years. So I would have thought we might have started about 9 years ago. So I'm not great with exact dates, but about 9 years ago for the first one. We started in Bali in the same hotel, I think, with 3 or 4 senior traders and 5 or 6 clients, and it's just grown from there.
Right now, only the online event is available. JK.
Look, you can talk to Kathy. We like Kathy, we do our best, but look, the numbers are the numbers. And if you want to go live, contact Kathy directly and we'll see what we can do for you. But really, we are packed. And we're not packed, that's just not true. We don't want to be packed. So if I can put one more in there for Kathy and there's still space for everyone. Look, I really like a nice environment. We've got plenty of space. And one of the cool things, we sit in this big semicircle, and during a live trading event, one day you sit next to Kathy, the next day you just sit next to Gordon, the next day you sit next to George. If you can be there live, it's fantastic. I'll do my best to help, Kathy, I really will. But right now, we're not looking to sell any more live. We want to keep the balance right. If you really want to come live, have a chat with Kathy, and I'll do what I can. I might get one more professional trader to come along if we get one more client.
That would be really generous, Paul. So if you are interested in flying all the way out to Bali and sitting in the room with with all of us and 20 other traders, I will, pass your name on to Paul and see if we can make this happen.
Cheers, Kathy.
All right. And I'm so glad. It seems like everyone really enjoyed today's session. I learned a lot as well. Thank you all for joining me. And for those of you watching on replay, if you have any further questions and if you want to know if a spot's still available, please feel free to email me at kathy@vktraders.com. Otherwise, I'll see you all soon. Thank you. We have one question. What's the nationality composition of attendees? First of all, if you look at the speakers from all over the world. Gordon and I are from the US. Ash is from your UK, right?
UK. Yeah.
And Paul is from New Zealand. We've got a bunch of European traders. I was able to invite one of my community members, and he's flying in from Toronto, so I'm super excited about that. So it's, do you want to add in, Paul? Where are all the attendees from?
Between us, we're coming from El Salvador, Johannesburg, through Australia, Tasmania, Sydney, through Hong Kong, Malaysia. It's a pretty diverse group. We are, nationality is not something we think about really in our organisation. We're a very, very multinational company. So, I would say off the top of my head, the only place I can think of that's big, that there's no one coming from at this stage, is China, and we just don't really work in China at all. No reason for that. It might happen one day. But as far as the rest of the world, we're pretty well covered. We've got, as I say, a couple from America, South Africa, El Salvador, Australia, UK. We've got, throughout UK, we've got 3-4 coming from the UK. Plenty of different places around the world. And again, I guess group from Singapore, maybe 3 or 4 of the team, and maybe 8 or 9 of the clients coming from Singapore.
Awesome. All right. So once again, thank you all of you for joining us. Many of you were watching from Europe, so you must be committed to be up at 2-3 a.m. watching us. So please get some rest, and then back to the markets in the morning. Otherwise, have a great day, and we'll talk to you soon.
Thanks for this, Kathy.
Thank you.
Cheers.